There
Now,
we
now
go.
I think.
Yes.
Okay, I got a little message telling me you could see it. Great. So like David mentioned, I'm wrapping up the survey form actually with sections L and M. And so we're diving into the final parts of the farm farm operation and then into the farm household section. And there aren't many changes to this section at all. So hopefully we can get through it quickly and leave plenty of times for questions if anybody has any. So Section L is really short, and there's two main objectives here. The first is to identify family farms, which is something that a key statistic that we report on every year in the Diverse Family Farms Report. And it's of interest to a lot of different entities, as Jim McDonald explained earlier. So I'll go through that, and I don't have a poll, but I do have a couple of knowledge checks. So hopefully that'll keep everybody engaged with that material. And then also we aim to characterize the ownership structure and shares, which we actually use to calculate farm household income here. And I see a chat. I'm just going to make sure it isn't. Oh, I'm sorry. It was Stephanie. So I'll just keep going. So let me just show you here. So the key thing I want everybody to remember about this question about family farms. So the question is it's pretty simple, but I think it can sometimes be tricky. So the question is, was more than 50% of the operation owned by one of the producers of the operation, their household or extended family? So the key things to note here is that a single family, so they related by blood, marriage, adoption, and they don't have to only live in the household of an operator. They're extended family, right? So anybody related by blood, marriage, or adoption to at least one of the producers, if those people in combination own more than 50% of the farm assets, the respondent would answer yes to this question, and we would classify the farm as a family farm. So cases that are not family farms are when all of the assets are owned by a single family, but they hire a manager and none of the family members that own the farm are actually operators. So that would be not a family farm. And so I'm going to go through a couple of questions here to check everybody's knowledge, and I hope you can participate in the chat. So Joe and Sam are friends who operate Joe and Sam's farm, and each owns 50% of the farm. Is this a family farm? Maybe you can reply in the chat. I know I'm seeing them. Great. So it looks like people who have answered have gotten it right. I'm going to show yes, the answer is no. And the reason is that neither partner owns more than 50% of the farm. So the key thing is they're not related and neither owns more than 50% of the farm. So I have one more scenario. Hopefully it's pretty straightforward and a little bit fun. Veronica and a hired assistant manager run Ronnie's feedlot. She owns 25% of the farm and her parents and siblings own the rest, but do not help to operate the farm. Is this a family farm? Again, using the chat. Oops, well, I gave away the answer. Sorry, guys. Yes, it's a family farm. And why? Because the entire farm is owned by Veronica and her extended family. And so even though she hires a manager, she's engaged in the operation. And so she is, it is a family farm. Okay, so I hope that that's pretty clear. And I think that the answers that we've been getting over the years we haven't seen a big fluctuation in the share. So I think it's fairly consistent in how people are understanding that question. So if you have any more questions, please shoot me an email or put it in the chat. So the next part of Section L is farm organization and ownership. And it goes through a lot of details about how many owners and what share is owned by the principal operator and his or her household. And remember, the principal operator was identified earlier in Section K, and whether they're a limited liability corporation, and then how they're organized for tax purposes. And we do use this information to help us characterize the assets that the farm owns and assign those to the farm household, and also the debt and the income from the operation. So we do use that information in quantifying the farm household's income, assets, and debt. The remaining questions also contribute to this, that ask about the share of the net farm income, whether or not the principal operator shares in the net farm income and how many households. And if it's a C corporation, whether or not they're asked to report the dividends that they receive, and that's the income that the farm household receives. And then all other operations that are not C corps are asked to report the percent of the net income received by the principal operator and the household. And that's how we determine how much of the operation's income is received by the household, so that we can add that to the off-farm income to determine total household income. So that really concludes this section, and I'll pause to see if there's any questions that come through in the chat real quick, or anything. Maybe David can tell me if anybody raises their hand, or you can just speak up. But I know it's a short section, but I just wanted to make sure that people have a chance to ask questions. And there weren't any changes, so that's smooth sailing for us this year. Okay, it looks like nothing's coming along, so I will continue with section M, which is really the final section that the respondent participates in. So this section is on the farm household's income, assets, and debt. And when I say farm household, I mean the principal operator's household. So again, the objective is pretty straightforward. And the main thing to point out here, when we're reporting income amounts or asset amounts or dollar amounts, we use these value codes. And if there is a loss, the value code is reported with a negative sign to indicate that the loss was in the range that was negative. The $0 value has a value code of 1. I know this can kind of be tricky, so it's just great to remind people to look at that. And when they move on to the second page of the questionnaire with the assets and debt, they do have to look backwards. So it's just helpful to remember that those are the value codes we're using. I want to point out that this section hasn't changed from last year. Last year we did add something that I'll point out again that we've continued this year. But this is the one place where we ask the principal producer, the spouse, and other household members to report their earnings separately, so that we can quantify those separately. And that's all off-farm wages and salaries, net cash income from operating another farm or ranch, and net cash income from operating any other business. So we ask for those to be separated by the different household members. And again, the value codes are used. All other income is reported at the household level. So people add up individual amounts and report those there. And I highlighted here that we, again, this year are asking for these economic impact payments, which were delivered at the early part of 2021. And we asked about them last year in the same line and the same item code. So we're continuing it again. And I note here on the slide the two main amounts that people should have gotten. And it just depends on their adjusted gross income. Households with really high income would not have received these checks, but everybody below the threshold, it was about $150,000 per household, would have gotten them. And so the second payment, so the first EIP was received in 2020, but the second payment was about $1,400 per person, and the third payment was about $600 per person. So that gives a rough estimate of how much you should see. If they reported that they only have 3 household members, then they should have gotten about $6,000 in a payment, about $2,000 per person in calendar year 2021. So I just want to highlight that it's only the economic impact payments that we're aiming for here. Any other COVID assistance would be, like if it was through like a PPP in their off-farm business, that would have just be reported in their total income for that business. and anything for the farm would have been reported in the farm government payment section. So moving on, the next chunk of this section M is spending, and there's no changes from the previous year. I just encourage everybody to remind people to check the no box or the none box if they didn't have that category of spending and that the value codes are used. And then the final part is off-farm assets and debt, where we're asking about any assets that are not associated with the operation that was surveyed, that was sampled. So again, they can be farm assets, but they're not owned by the operation, or they weren't reported in that farm section. And then there any other personal or household debt and assets are reported here. And we do have one question where we ask how much of the debt, the off-farm debt that the household has that is secured by farm assets. And I just point that out. That's the one tie back there to the farm operation. Okay. And so the final section of section M is 3 questions, which aims at the previous year's farm sales, net operating income, and off-farm income for the household. And we use this information to determine who is a limited resource producer in our survey. And so we have that data. And as I mentioned before the break, we actually just got a request from somebody in Nebraska that wanted to get an estimate of how many limited resource producers there were in some counties. We can't give county level information with ARMS, but we gave the state information. But this really is our only source to do that. So we asked them to use those value codes to report the amount that they received, these 3 values. And so Zoe, thanks for asking what's the definition of a limited resource producer, since it's fresh in my head. So the idea is that the farm has limited sales, and the farm household, the principal operator, has low household income. And the exact definition of limited sales is about $189,000 in fiscal year 2022, I'd say. And that level is adjusted up for inflation every year. And the idea is that they have to have those low sales 2 years in a row. So one low sales year for a farm that normally has very high sales would not fall into that category. It's the fact that they have that 2 years in a row, and then that the principal operator has the principal operator's household has income that falls below the poverty level for a family of 4, which is just over $26,000 a year, or half of the county median income. So in fact, we merge into our data set that we analyze at ERS, we merge in the small area income and poverty estimates for every county and every year, and get that median income, and then compare the household's income in both years to both years' county median income. And if it falls below that, or the poverty level for a family of 4, if there are counties where the median income is below that, then that's a threshold that counts. So they have to have it 2 years in a row. And so this, for 2021, we're going to ask about 2020, and we're going to use those 2 years. And on average in the whole US, I think we have about 10% of all producers are limited resource producers. And of course, that's going to vary across the states. And of course, it's going to vary year to year, just depending on income and sales and how that runs. So with that, let's see, I am on my comments question slide, and